Unit 6. Using relevant applications in practice, posting of the most common events in a company private entity. In this part of the thematic unity, the relevant practices in the posting of business events are explained using practical examples. The practical examples provide a clear and easy understanding of the process of registering business changes in the company. In order to present the relevant practices in the posting of business changes, each posting contains an explanation that gives the reader an additional insight into the matter. After reading this unit, you will be able to read and present practical examples related to posting of business changes. The Accounting Act prescribes the obligation to keep books according to the rule of double-entry bookkeeping. The proper posting of data must meet the following criteria. Algebra HR. It is based on an appropriate document. The information entered is in the Croatian language. Data are entered in a continuous sequence without leaving a free space. No possibility to delete and change the original text and the amount. Posting of data immediately upon the occurrence of a business event, depending on the time of arrival of a document for bookkeeping. Respecting the principle of an unchangeable record. Below are the posting examples based on the most important economic categories. The most common examples of assets classified as intangible are computer software, publishing rights, development expenditures, brands, know-how, goodwill, patents, licenses, concessions, trademarks and similar rights, franchises, licenses, marketing rights, design. If we accept one of many definitions of intangible assets that defines it as being non-physical, intangible, and which can be identified, it cannot be expected that a person who has not gone deeper into the analysis or is not professionally involved in financial accounting activities can understand what can and should be deemed as an intangible asset. From the accounting aspect, intangible assets are defined by the Croatian Financial Reporting Standards No. 5 and International Accounting Standards No. 38. These standards require the ability to identify assets and to control over them. The identification of an intangible asset implies its authenticity, which results from the possibility of separate sales, transfer, licensing, leasing or exchange. Also, the control over the means implies the possibility of realizing the future economic benefit that needs to flow from the use of the means. The most common examples of assets classified as intangible, according to the above-mentioned standards, are computer software, publishing rights, development expenditures, brands, know-how, goodwill, patents, licenses, concessions, trademarks and similar rights, franchises, licenses, marketing rights, design, etc. Intangible assets can be internally developed within the company, but according to the provisions of the above-mentioned standards, the research phase and the development phase need to be distinguished. The expenses incurred in the research phase cannot be capitalized, attributed to the value of the intangible asset, but should be treated as costs incurred in a specific period. In the development phase, in order to attribute the costs incurred to the assets, the technical feasibility of the intangible asset to be completed must be proven, so that it is available for use or sale, the intent of the entity to complete the intangible asset, the availability of appropriate sources for the completion of the development phase, the possibility of the use or sale of assets, the possibility of reliable measurement of the costs incurred and which are attributed to the intangible assets during the development. Intangible assets may have a limited and unlimited useful life. In the case of a limited useful life, the asset is amortized, in case the business entity uses regular annual depreciation rates, up to 25%, i.e. in case of accelerated annual depreciation rates, up to 50% in accordance with the provisions of the Income Tax Act, Article 12. Unlimited useful life implies the inability to estimate the time frame when the entity will receive cash inflows from using the asset and the asset will not be amortized. A very common example in practice is the acquisition of software or investment in property such as an investment in a rented space. Author of the example, Natisa Mezic. Example 1. The entrepreneur has obtained a computer software license at the price of 2,000 kuna with VAT. Example 2. Based on the long-term lease contract, the entrepreneur has invested in the necessary space adjustment Kuna 100,000 with VAT. Based on the above-mentioned business event, we carry out the posting in the main book into the account of investment on borrowed assets for the improvement in the course of the lease contract, into the account of the obligation to the supplier providing the renovation service, and into the account of the obligation to pay the VAT to the state. Fixed assets are assets that will be realized over a period of more than a year, i.e. having a lifetime of more than 1 year, or assets that will be realized or held for sale or consumption for a period longer than the business cycle of a business entity. The primary purpose of this form is not the resale, but the use in the business process. Adv-Cro-Eng 12, 2015. In order to classify and define an item as tangible fixed assets, the following conditions should be met. Adv-Cro-Eng 12, 2015. The company owns and uses those assets in the manufacture of goods or in the delivery of goods or services, for renting to others or for administrative purposes. It is an asset that is expected to be used for more than one period, i.e. longer than a year, when it is probable that the future economic benefits associated with the asset will flow into the company, when the cost can be reliably measured. MRS 16. Real estate, plant and equipment purchased exclusively for the purpose of further sale within the core business are not classified as non-current assets but as inventories. In such a case, real estate, plant and equipment are defined as current assets because non-current assets are defined as assets that do not have the characteristics of current assets. In accounting, this is important because the revenue and expenses when selling current and non-current assets are recorded in different ways. Adv-Cro-Eng 13, 2015. Fixed assets, immovable assets, plant and equipment, in most companies represent a significant part of the total assets and are therefore important in presenting their financial position. One of the main issues in accounting related to fixed assets is the choice of the moment of recognition of assets and recognition criteria. Adv-Cro-Eng 13, 2015. The following is an example of the addition of fixed assets, and it is the procurement of a plant. The assumption is that there were no costs of putting the plant into operation and that it did not take a longer time to install the equipment or plant, and therefore there were no interest costs that could be attributed to the plant. There is also the example of the sale of fixed assets. The plant and equipment are not initially intended for sale in the ordinary course of business, but this item of property may be sold due to obsolescence, replacement with a new one, etc. The assets can be sold at a higher or lower price than the book value, therefore both examples are given. Example 1. A bank loan of 500,000 kuna was approved for the procurement of the production plant, thus the creditor paid directly to the supplier of the plant the amount of 500,000 including VAT. Example 2. The property was sold at a lower price than the book value. The book value was kuna 200,000 and the property was sold at the price of kuna 170,000 plus VAT, so the realized loss was kuna 30,000. Example 3. The property was sold at a higher price than the book value. If we take the previous example where the book value is 200,000 kuna, and the property was sold at the price of 230,000 kuna plus VAT, therefore the realized profit is kuna 30,000. Explanation 1 and 3. Accumulated depreciation is transferred into the tangible assets account and the unamortized cost of acquisition is determined. 2. An invoice is issued to a buyer and VAT is recorded while the deficit is allocated into the expense account. 4. An invoice is issued to the buyer, VAT is recorded and the surplus is allocated to the revenue account. Trade receivables are recorded on the debit side, since trade receivables are assets and their increase is recorded on the debit side. The VAT obligation is recorded initially or as an increase on the demand side, since the increase in obligations and capital is recorded on the demand side. Short-term assets are a form of the company's assets that can be converted into cash in the period up to 1 year. The capital invested in this type of asset constantly changes its form. Available funds are used for the purchase of raw materials and wage payment. In the production process, raw materials become semi-finished and finished products. By selling of finished goods, claims are created and are finally converted into cash in the account and in the cash register. The basic groups of short-term assets are 1. Inventories, raw materials and materials, ongoing production, unfinished production and semi-finished products, commodities, finished goods, advance payments. 2. Claims, claims of related companies, customers' claims, claims for excess payments based on profit, employees' claims, state and other institutions' claims, other claims. 3. Financial assets, shares in related companies, loans to related companies, securities, loans granted, deposits and bails, purchase of treasury shares, other short-term investments. 4. Money in the bank and in the cash register. Short-term assets are divided into Class 1 money and rights, claims. Class 3 inventories, items, raw material and material inventories, inventory, car tires, spare parts and packaging. Class 6 inventories, items, of semi-products, finished products. Money. Doing business is possible under the condition that the entrepreneur opens a business account at one or more banks. It is a transaction account through which he will be making all the payments. This account is also called a gyro account. 1. The owner has paid into the gyro account the share capital of Committee 100,000. Explanation. The increase in assets, money, is recorded on the debit side, and the capital increase on the demand side because the recording is in balance and the assets and liabilities have been increased. Claims. Trade receivables are claims against buyers and others for money, goods or services. For the purposes of financial statements, receivables are classified as short-term or long-term. Short-term trade receivables are those that are expected to be collected within 1 year or during the current business cycle, depending on which period is longer. All other receivables are classified as long-term. Receivables are further divided into trade and non-trade receivables. Trade receivables are amounts owed by buyers for goods sold or delivered services as part of normal business activities. Trade receivables, usually the most significant of the company's assets, may be further classified as receivables from buyers and debentures. Customer receivables, the oral promise of the buyer to pay for the goods purchased and the delivered services, are normally chargeable within 30 to 60 days and represent open accounts arising from short-term credit extensions. Debentures from buyers are written promises of the issuer of the debenture to pay a certain amount of money on a certain date in the future and may arise as the result of sales, financing or other business events. Non-trade receivables may arise from various business events, and can be written promises of both payment and delivery. Some examples of such claims are advances to officials and employees, advances up to or to company, deposits to cover potential damages and losses, deposits serving as a guarantee of performance or payment, claims on dividends and interest, etc. Due to its particular characteristics, non-trade receivables are generally classified and accounted for as separate balance sheet items. Receivables are part of the assets, and depending on their maturity, they are classified as long-term and short-term receivables. Those are fixed maturity assets. We are talking about short-term receivables if they are expected to be realized within 12 months, or long-term receivables if the maturity is longer. As defined by HSFI 11, receivables are recognized as an asset only when the entrepreneur becomes one of the contracting parties to which the contractual terms and conditions apply. Classification of receivables according to their type. Short-term receivables can be divided into receivables from customers, employees' claims, government receivables, excess payment of VAT, and other short-term receivables. The following is the example of recording claims from the state. 1. Goods worth 100,000 kuna with VAT have been purchased from the supplier and the invoice has been issued. Recording of business events related to retail merchandise in the main book includes 1. Calculation and recording of goods in the main book accounts. 2. Recognition of revenue from sales of goods and VAT recording. 3. Deleveragement of a shop for sold goods and recording of the purchase costs of sold goods. It is necessary to recognize sales revenue, item 7603, at the selling price of goods and to recognize expenses, item 710, at the purchase price of the goods sold. The calculation of the purchase value of the goods sold at the expense of the period, item 710, is done by calculating the VAT rate of the goods sold. For example, a 25% tax rate calculation is 20%. After that, we need to calculate the amount of margins in the merchandise, using the formula for the average margin of the store that can be calculated in the following way. Image 2, average margin. $6,681 store margin account. 663 goods account at the store. Source, directly with stroke, purchase and sale of goods in retail trade, accounting, audit and finances. Zagreb, October 2012. Example. In the example of recording, the measurement technique of merchandise inventory costs based on the retail trade method is applied according to AS 2, T17. If the results are approximately equal to the cost, the inventory cost will be calculated by using a certain percentage of gross margin, so that the inventory sale value is reduced. The calculation is done by applying the average margin to the retail price of the goods sold. 1. Goods, according to the invoice, worth 80.000 kuna were purchased from the supplier ABCDOO. Value of delivery 64.000 kuna plus 25% VAT 16.000 kuna. Also, a delivery invoice has been received and amounts to 1.000 kuna plus VAT. Calculation no is issued and the store is charged the value. The margin is 100%. 2. Daily turnover of the CDOO store amounts to 4.000 kuna. VAT amounts to 4.000 x 20% equals 800 kuna. 3. The goods sold are deleveraged in the accounting period. It is also necessary to calculate the average margin. Calculation. Calculation recording in the main book. Daily turnover of CDOO store is 4.000 kuna. The amount of VAT is 4.000 x 20% equals 800 kuna. At the same time, the goods in the store are deleveraged in the accounting period. It is necessary to calculate the average margin. After the calculations have been completed, a business event can be recorded as follows. The obligation is the present obligation of the entrepreneur, resulting from past events for whose settlement the outflow of resources is expected, as defined by HSFI 13. They are classified as short-term and long-term. In order for the obligation to be classified as short-term, it must meet the following criteria, HSFI 13. It is expected to be settled in the regular business cycle. It is due to be settled within 12 months after the balance sheet date. It is primarily held for trading. The entrepreneur has no unconditional right to postpone the obligation settlement for at least 12 months after the balance sheet date. When obligations do not meet the above criteria, we classify them as long-term obligations. The example OF recording of long-term obligations. The entrepreneur ABC has received a loan from XY company in the amount of 250,000 kuna. For a maturity of 5 years, the funds have been credited to the GIRO account. Capital, German capital, Poslovny HR. 1. In the business economy it is used to designate the size of the equity, capital owned by the company. According to the International Accounting Standards, equity is the capital of an enterprise which, regardless of the type of ownership, includes the value of individual investors' investments, the value of issued shares and other unlisted property, such as disposable income above share premium, property value appreciation due to positive revaluation effects, reserves, undistributed profit. There are 3 types of equity, in own capital, owner's capital, partnership capital and share capital. Owner's capital is that owned by one person. The owner has unlimited liability for the debts of his company with his entire property, business and personal. Capital owned by partnership companies is partnership capital. Although this type of capital is identical in terms of characteristics, it is possible that some owners have limited liability in the amount of business assets, limited liability partnership. The 3rd type of capital is share, corporative, capital. This capital is divided into shares and has a high degree of capital market mobility. The liability of its owners is limited to the amount of business property. 2. Money that an individual company invests in starting up or running a business venture. Capital means the total value of an enterprise's assets, financed from own and or foreign sources. Capital can therefore be viewed as assets, or ownership, liabilities, i.e. as their interdependence. 3. Long-term corporate liabilities, equity and long-term debts. 4. In macroeconomics, assets capable of creating additional assets. Capital is defined as one's own source of financing of assets and is calculated as the remaining assets of an enterprise after deduction of all its liabilities, and it consists of HSFI 12 http://neron-novin.nn.hr. Subscribe capital, capital reserves, revaluation reserves, fair value reserves, revenue reserves, retained earnings or loss carry over, and profit or loss for the current year. An example of recording in the general ledger. The profit in the financial year has been determined by the profit and loss account in the amount of 40,000 and has been recorded in the 9,500 account, profit in the financial year, and according to the shareholders' meeting decision, the profit is distributed as follows. Member X 10.000 kuna. Member Y 15.000 kuna. Member Z 15.000 kuna. A responsible accountant should commit to providing all his services in good faith, in accordance with the rules of the profession and conscientiously. Unfortunately, if the accountant's responsibilities are not contractual defined, it will be difficult to prove his sole responsibility for the omissions. Every bookkeeper must continuously improve his skills and knowledge, stick to the legal regulations and the ethics code. It is good to subscribe to relevant publications so that the person is always informed on changes to legislation. On the other hand, the business organization management is interested in the financial position of the company and its profitability. For this reason, the management aims to get the financial statements as often and as quicker as possible so it can take actions to repair areas with poor results. Investors will be particularly interested in the annual financial statements because they are the reports used by decision makers outside the company. For example, if creditors see the balance at the end of the year as strong, they will be more willing to give credit to the company than if the financial position of the company is weak.